Ladies and gentlemen, Greg McCloskey from ForexLive.com. The dollar versus Swiss has a pretty defined ceiling in place, and when I see a nice little ceiling or floor, I like to look at that level as a key barometer for traders going forward. So in this video, I'm going to take a look at that ceiling, explain it to you, and outline what you can do as a trader to take advantage of that. All right, I'm looking at the hourly chart of the dollar versus Swiss, and if you look at over the last 1, 2, 3, 4, 5, 6, 6.5 trading days, there's a lot of different swing lows and swing highs that come in between this yellow area right through here. This yellow area is defined by hourly bars that come up into that area, and you can see all these different times where the price and more where the price came into that area and found more recently sellers, 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 sellers. And that gives you an idea that, well, there is selling pressure in this area between the 0.8755 and 0.8770 level. Sellers are leaning against that level. As long as the price remains below that level, they stand to benefit from the reactions in the downward direction. Now, those reactions have become a little bit less muted or more muted of late. We saw this high right here move down to this low right here. This high right here moved to the same low right through there. So there's little reaction to the downside, but nevertheless, that ceiling is in place, and as long as that ceiling can hold the resistance on any sort of move to the upside, the sellers remain more in control. That's the way I like to say it. Now, on the downside, what we can also say is that the last move to the downside did break back below this blue line. This blue line represents the 100-hour moving average. Currently comes in at 0.8733, and the sellers had a shot to take the price further in the downward direction, but they failed on that. In fact, the price is currently trading at 0.87428. So when this happens, I like to say that there is a battle going on. There's a battle going on between the 100-hour moving average, that's this blue line in this chart, even though we just broke below it, and this swing area up here with the high at 0.87704. Also, in between that level is the 200-hour moving average. What's the significance of that? Well, if you go back in time and look at yesterday's trade, the high price fell short of that level. It also fell short of the high of the swing area. And if you go all the way back to this day right here, that was the last time the price traded above the 200-hour moving average. That goes back to, what is it, November 14th, when both the 100 and the 200-hour moving average were converged. And that break said, let's go lower. And indeed, the price did start its trend move to the downside, or restart its trend move to the downside. So what the technicals are telling me is that battle is going on between the high of the swing area, the 200-hour moving average, and the 100-hour moving average below. And at some point, the price is going to either break to the downside and break below the 100-hour moving average with momentum, or it's going to break above the 200-hour moving average for the first time since November 14th and get above this high swing area at 0.87704 and move to the upside. On a move to the upside, we'd be looking more toward the 38.2% retracement. That's of the move down. And that move to the downside goes back all the way to this point right here. This is the high price going back to, I guess that's October 31. So the 38.2 comes in at 0.8836. That would be the reward for breaking and staying above this swing area, or the target, as I like to say. There may be interim targets along the way, including maybe this area right through here where we had a number of different swing lows and swing highs coming around. It looks like 88.10-ish or 12 type area. So watch the 88.12, watch the 88.36. Those would be targets on a break of the 87.070 level. Now on the downside, if we break below the 100-hour moving average with momentum, we would stand to look toward our low prices that we saw this month. This month and into last month. The December 1 low came in at 86.62. This low right through here came in at 0.8684. So that's a technical view from the dollar versus Swiss. Yes, we have the ceiling in place. Yes, the sellers are more in control against that ceiling, against a 200-hour moving average. But they have work to do, and getting below the 100-hour moving average would be what traders would be looking for to give traders more confidence that the sellers have taken more control. Hope you like this video. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.